But let's take stock of Canfin Homes and how their quarter went by was. Girish Kousgi from the company joining in on the show right now. Girish, hi, good morning. Good to have you on the show. You've clocked your highest ever quarterly disbursals, Girish. What's fueling the growth, and highlight for us what the key trends that you've picked up and noticed over the quarter?
Yeah, good morning. I think the trend is pretty good, and the next few quarters will be very good for the industry and for Canfin as well. If I have to talk about Q2, I think there are many positives. Book grew by about 13.2%. Disbursement was all-time high, and we actually bet last quarter high, which was 2,001 crores. And this quarter we have done 2,208, which means a handsome 10% growth on disbursements. So very clearly growth is back. And if you look at the book growth, it is one of the highest in last 7 quarters. And disbursement is all-time high. Previous all-time high was last quarter. Now, if you look at NPA from 0.9, we have brought it down to 0.78. Now, if you look at profitability, in an interest rate falling scenario, margins would come down, followed by yield, which is revenue. Now we are almost through that stage. Now you see that this quarter margins have improved. NIM has gone up from 3.31 to 3.4, and the spread has inched up by 1 bp. So going forward, margin will increase, and therefore the yields will improve at a portfolio level, and therefore you will see both revenue and PAT increasing going forward. So this quarter, if you have to compare PAT and revenue, obviously it will be negative for the simple reason last few quarters we saw rates coming down, and therefore we had to reprice our portfolio, and that is till last October we did that, so it will have a 1-year lag. From now onwards, you will also see that the PAT and revenue on absolute terms slowly going up. So I think it was a pretty good quarter.
That's nice. Help us understand what segments have actually seen maximum growth. In particular, salaried, segment has actually performed for you.
Yeah, I think COVID impact is almost over now, but I think still self-employed non-professionals are a little bit shying away from market. I think they might take some more time to get back. But whereas we see robust demand in salaried, so slight shortfall in self-employed is filled in by robust demand from salaried. And if you look at geographies, all the geographies are doing well for us. So there is not even one single geography which I can pinpoint and say is not doing well. I think in terms of demand, in terms of business, all geographies are doing well, and all the segments, whether it is affordable, whether it is slightly mid-ticket, high-ticket, I think all segments are doing well. Builder segment is doing well, resale is doing well, construction is doing well. I think across all the product lines, we are doing pretty well. So this demand is broad-based and across all the segments and geographies.
So I had a very simple question to ask you, and I'm just going to move away from the earnings and this and the other. The way we have seen the recovery in the property market, the first time maybe the kind of boom since the fall of Lehman Brothers. The developers can't stop smiling, whether they're from the private space or the public space. But why are the housing finance companies not seeing that kind of boom, momentum, traction?
I think it's a very, very good question. See, all the housing finance companies, if you see, they're doing well on disbursement growth. Now, there may be some stress on revenue and PAT. That's only because last 4 to 5 quarters, rates have come down. And now there is a reversal in rates, which is why you would have seen last 4 to 5 quarters, margins shrinking, followed by yields shrinking. Now, margins have reversed. For example, from 1st April till now, we have increased rates twice. So in last 8 quarters, last 2 quarters is where we have increased rates. So this impact you will see in the quarters to come. First, you will see improvement in margins, followed by improvement in yield, which means the revenue will increase, which means we will see PAT growth going forward, which is why you see that most of the housing finance companies, on revenue and PAT, there could be a degrowth. That is simply because of this change in scenario, which happened in last 7 to 8 quarters. And some of the companies which didn't manage their book well during COVID. For example, we took a choice and said that during COVID, we have to focus on customers, we have to focus on asset quality, irrespective of the growth. We completely focused on portfolio, and therefore you will see our NPAs coming down over last few quarters, right? And now, since COVID is almost over and out, now you can see growth coming back, and if you look at last to last quarter, we did all-time high of 2001 crores, and this quarter it is 2208 crores. And I'm sure H2 this year would be far better than H1 in terms of disbursement and book growth. And eventually, since margins are going up, you will also see revenue and PAT increase going forward.
So then how are you going to ensure that Can Fin Home Finance is going to be able to do that when you see this momentum come back, when it's not just about disbursements? Have you got a strategy in place?
Yeah, we do have a strategy in place. As I told you, last 8 quarters, we had a strategy to be focused on customers, focused on asset quality, and focused on liquidity. So now, the market has opened up, demand is robust. So now you will see our disbursements, we are hitting almost all-time high every other quarter. I am hopeful this trend would continue in future. For the first time in last 7 quarters, we have clocked the highest growth in book. Margins have reversed. If you see last 8 quarters, margins were coming down. It was a strategy, and therefore it came down because we had dropped rates to retain our customers and to acquire new business. Now we have increased rates. We're doing well on disbursements in spite of some of the banks announcing 6.5, 6.6, 6.75 rates, whereas our rates were at least 100 bits higher. Since we increased rates in last 6 months now, we have done all-time high disbursements. So it's only a question of time that you'll also see our PAT showing good growth.
All right, Mr. Kousgi, thank you so much for taking the time, for breaking down the numbers for us, and also laying the roadmap to how you see the rest of the financial year panning out.